Hi traders, in this video we're going to go over a few trades that I made late in the afternoon on July 25th. And if you were trading on July 25th late in the afternoon, you know that there was breaking news that broke right around the 3:35 time range. And that breaking news had to do with the announcement of a possible breakthrough in the trade war with Europe. So to go over the trades that I made, I initiated a long trade here at 3.25, and I was looking for 9 ticks. So that 9 ticks filled at this point right here. And after the formation of a extension zone here, I entered again this price right here of 375. The reason I want to go over this is in looking back at this, I feel that I made some mistakes in the exit, which should have occurred immediately before the news broke. As you can see, we had additional extension zones created here. However, we had buy extension zones along with the POC absorption and POC extension buy, which occurred down here. However, what I feel that I did wrong is that initially I had a 9 tick target, and that 9 tick target would have been filled at 3150. The reason that that's a mistake is that there was previous very strong support down here at 3150, and additionally, in respect to this support, this blue support zone down here, that would have been another excellent reason to take it off either at 9 or 10 ticks. Both of them would have gotten filled right here immediately before the news. However, I had a target of 30.75. I wanted a full 3 points out of this trade, and that was not going to happen. When the news broke, this immediately happened, and I used a sim stop. You can see where my sim stop eventually got filled at, which was all the way up at 6 even, when it should have been filled somewhere in the neighborhood of 475, which is where I had it set at. With that being said, I did re-enter the market here after extension zones were created, and as the market fell back down into an extreme area of support back here, which had just been created moments earlier, took that off at 40.25. So that kind of made up a little bit for the loss that I'd previously taken due to the sim stop problem. However, at this time, I didn't understand what the breaking news was, so decided to basically stop trading and try to find out what that news was. What I want to do now is look at the 7 range chart and look at how the extension zones were created and led to the appropriate trades. Now, for somebody that wasn't getting greedy and putting their stop exactly at the blue zone, as I said, the appropriate zone would have been 1 to 2 ticks away, and here at 31.25 would have been a nice buy. We then had an POC extension buy being created, and that led to a very significant trade. In here, we see 4 different price levels where the market book was swept with no selling. And kind of an unusual occurrence right here, there seemed to be extremely strong resistance up here at 39. Now, I don't have any idea why somebody would be coming in and supplying resistance at that price unless it was just somebody's computer and they hadn't realized that there was breaking news and they didn't have it and they didn't take their computers offline, and these computers were just responding to a previously programmed resistance pattern. As it was, we'd also have program trading arbitrage, which would be expected because the futures market had moved so fast and so quick. In program trading arbitrage, we would expect to see some selling, and that selling again took us right back into where the order book had been swept at. Again, here at 36 even, we see the extension zone being created, and that continues to take us up to a tick divergence exhaustion trade again, where we create one sell exhaustion zone back into a buy area where we had previously seen a support there at 38.75. A new extension zone is created at 38.75, and again we now come up to a price of 44. Again, a sell extension zone here at 43, but then we decide to sweep the book again here at 3:47 hours. That's going to take us up again to what would be the eventual high there of 49.50. ZoneTraderPro creates an exhaustion pattern, and you can see the extension zones having been created there at 48 and 47.75, taking us down, and that takes us into the close where again strong selling took us all the way down to 43. I wanted to take a quick look at the delta strength indicator, which is down here. This number of 418 is not the delta, this is the delta strength. And again, it reflects somewhat of a bad decision not to have taken it off at this point, because at this point we had high volume coming in and a significant change in the delta down here of 725. Basically, I should have seen this and hit the close button on, or tried to limit out here at 32 before all the buyers really started coming in points higher. You can see, however, that as the market accelerated, you see these just absolutely huge delta strength numbers, which is the point of the indicator. You see these coming down, and again, this is the area of the previous support and extension zones, and we again see a good number of 275 along with the delta change indicator down here. In a strong trending market, after the profit taking from the zone here, we would expect to see a reversal from the minor support area right here. That's exactly what we got. As you may remember from the video that was also just made, the delta change number is not a timing indicator. The delta change number is more like a brake on a car. Sometimes you see the brakes coming on and then changing, and this is exactly the setup I like to see. I like to see the delta change number to be a positive, to be going long one bar before the bar where I'm actually going to get long at. And as you can see, the price does accelerate again on very large delta strength numbers. When the delta strength numbers are this high and on high volume, as in this 605 number, what that's telling you is that there's very little resistance that's going on within the bar. A number down here of 2 to 300 means that there was sufficient resistance from sellers, and you can see that in the first two bars after the apex right here. However, we then get over to 300 and the market just accelerates from there. And this is really the reason for the delta strength. When I first created ZoneTraderPro, I didn't understand why a trade would fail and why a trade would succeed. I knew statistically that that would happen, but I didn't have an explanation for that. And the delta strength indicator is really the best tool that I've ever seen to understand why a market is either in a strong trend or a normal trend. And as you can see, the numbers accelerate from 605 to 983 to 748, 755, and so on. This is the tool that's telling me that I am in a strong trend, and if I am in a strong trend, that I want to probably move my target and be a little greedy at this point. Another thing that you're going to see with this is, again, at the apex of the move, again we have high volume, and with a just somewhat of an average number, and you can compare that to just normal profit taking, and then a good number again with the resumption of the trend. Again, the delta change numbers are good, and this is occurring exactly where you would expect it to occur at, which is the intermediate support zone. Again, these are fairly large numbers of 1400, taking us all the way up to the high of the day at 49.50. Kind of surprising we didn't see high volume up here. And again, here's this pattern of the delta change coming in at the exhaustion trade, but not exactly at the top. Again, somewhat like the brakes coming onto a car, and the car slowing and stopping and reversing. Hope you enjoyed this short video on the reversals in the ES market for July 25th. And of course, if you have any questions, please give me a call.